Hey guys, it's Ricky with Techbud Solutions. So we're going to give it a couple minutes so everyone can go ahead and tune in. So today is August 21st, and it is our weekly stock talk. So pretty much, if you're watching the video after, after the live stream is complete, just know that I lost my train of thought. Okay, but pretty much what I want you guys to know is if you guys are already in Techbud Solutions or have any way of, contacting me, you guys can feel free to message me through Facebook, message me through the GroupMe application if you're in that group already, or you guys can comment on the video or also message me or text me if you have my number about any questions that you guys might want me to touch base on. So the reason that we have these weekly talks is just so we kind of get, just in tune with this week to come, what to look out for, what stocks, also talking about, last week, kind of going through that GroupMe. So we kind of just want to review, what happened last week, kind of the mistakes. If you guys want me to share some of the mistakes that you guys made, just so you know, we're a networking group, so we can kind of take part of, what mistakes we made so we don't make them anymore, saving us money overall. And also, good traits are good, like the best practices to look for. So sorry that it's a little bit loud. One of my buddies who's cooking spaghetti right now for dinner. So yeah, let's go ahead and get started. Again, reach out to me if you have any questions. We do have one by one of the members from the East Coast that couldn't make it tonight just because it was a little bit late for his timing. But let me see if I can figure it out. Thank you guys again for taking time off your Sunday night to join the GroupMe. All right, here we go. All right, so I'll answer that. Let me see. I'm going to start sharing my screen, and I'm going to start talking to you guys about my watch list and then what I looked out for, what I traded last week. And yeah, kind of my best practices. If you guys want me to share your best practices, then just let me know. And then, yeah, let's go ahead and do it. So again, we're just doing this prep in a sense so we can get prepared for this upcoming week, what to look out for. And if you guys have any way of communicating with me, please feel free to reach out to me in any social media, or if you have my line, feel free to text me. So let's go ahead and get started. I'm going to start sharing my screen. Okay, so first one that we're going to talk about, actually what I want to talk about is my watch list. Let's go here and then go here. So this is my watch list. What I use, this is Fidelity as my brokerage company. I use Fidelity, TD Ameritrade, and Robinhood. So let me just kind of talk about those three companies. So again, Fidelity is what I use mainly to do my technical analysis, which are these over here. Whoa. It's this. So it kind of lets me analyze the stock overall, how it's been trading, what to look out for, good areas of buying, good areas of, to sell. And it's very useful when it comes to that platform. I don't like the live platform as, I don't have access to it yet. So you have to do a couple, I believe 135 trades or something, or 35, I'm not too sure, a certain amount of trades. And then you get, issued like Super Active Trader Pro or something. It's their live platform. I just use TD Ameritrade, so they have a very nice platform. And you can create an account with them. It's very easy to use. It's a great platform where it tells you, that's usually when you see all the numbers going in, changing from red to green, red to green, red to green. And then I use Robinhood to execute most of my trades. I only get 3-day trades within a 5-day period. After that, you get marked as a day trader, and then they suspend you for about 90 days. So you don't want to do that. So just make sure, you trade carefully, you make your trades count. And, if you're trading well and you're just getting started, then you shouldn't be issuing more than those certain trades. But yeah, let's talk about my watch list. So how I set this up is I put the greens all the way on top and then the reds on the bottom. And how you do that is you change this. You just touch the changes and then it changes it for you. And then all the reds on top, so the biggest losers and then the biggest gainers. And this is what I mainly look at percentages, because that's all I care about. When it comes to trading penny stocks, if you can make 10%, so these are the ones that we should have looked out for. And if you look, I was trading TRKK. So it ended up hitting almost 4.9. I bought in at 4.45. So with that, I hit 10%, and then I sold on Friday. But then it hit lows of 42, and then I ended up buying in again. So then I'd be selling around 5 again, hitting my 10% potential. So I'm going to be talking about that one in a little bit. But not when I'm looking at at the end of the day, the market's closed. What I look at is actually down here. I see which ones have. So meat is like a great example. So which ones dip so much that mainly their momentum is just going up, right? So those that dip so much. They went down so much that they hit a certain safety point, and once they determine their certain safety point, then in reality all they can do is go up, right? So oh my god. All right, so what you can do there is you draw these trend lines. So Fidelity also really nice for this. Let me go ahead and remove that. Draw a trend line, and then pretty much what you look at is the upward trend, right? So there's one there, one there, one there, one there. And you can see that every time. I'm going to go in a little bit closer. We're going to go to a 5-day increment. And you see that it was kind of just staircasing up. So all I did was, it kind of just determines on, and then it hit that safety net. Once it hits that safety net, it comes back to this little resistance that you see right here. So when we trade this, there's actually a picture that I had of different levels of trading, right? So when it comes to different levels of trading, this is essentially level 1. So let's talk about meat. We're going to draw a safety net right here. So the lowest it's been was about, actually wasn't that low. The lowest it got filled at was around 173, a little bit above that. So once it determined its safety net there, it started staircasing up. So you can see, this bouncing up the line and going according to this trend line. So when it comes down to that, it hits a certain safety net, and then once it does that, then it starts, staircasing down in a sense. So what you want to do is when you're trading penny stocks is you want to make sure in that certain level of trading. So this is level 1, level 2, level 3, level 4, and level 5 for meat, right? So when you're trading meat right now, it's essentially in level 3. So from 1, 2, 3. Right now, it's pretty much on a good buy area, right? But this is considered a critical point. So it could either go start picking back up, or it could either start going back down. So this is called a critical point. So what you want to look out for is you look back based on its history. And when it was at that same point it was, a week ago, then you could either see, it's going to either pick back up or drop back down. And what I always tell the team, is look for positive or upward momentum. If you don't see it picking up, then, it's obviously possible for it to continue to drop and hit another safety point, right? So it ended up doing just that. So once it dropped below that safety net, it hit the level 2 safety net and then started picking back up, hit pretty much the resistance level, stayed around the resistance level, and then broke it, right? And then started picking up to this resistance level, coming down to this safety net, and then started picking back up. So it pretty much stayed pretty stagnant within this day of trading, and then picked back up and then dropped back down. So we're seeing it hold right now above $5, but you want to make sure that it continues, the volume, and that's something that we'll get into a little bit later, but that the volume is there. So when the volume is there, that's when you're going to see this upward momentum. So there's certain critical points. So when it passes most likely like 510, then that's when you see this break and going, past 530. That's still not your 10% potential. So what I'd say is be patient, set your alert when meat goes below $5. That's what I would do. Pretty much just wait for it to staircase back down, and once it does, just wait for it to pick back up, and then you can lock in, your 10%. And with that, yeah, I mean, that's pretty much my analysis on meat. Rex is one that we trade quite often. Rex is more of a true penny stock. It does have good areas of fluctuation. We've pretty much determined, we've been trading this one for quite a bit. So the lowest it tends to get to based on even like year to date is around 54 cents, as you can see down here. And then you could see down here when we go to a 1 month increment and change the frequency, we can see that it stays above 55 cents. So what we can determine is when we're trading a penny stock, when we're investing, just think about like investing in anything. You want to make sure that you buy at a good price and you could sell at a higher price. So if you could see based on the history of Rex that it stays above 55 cents, and then you wait. I mean, even though, you know, it tends to like go above 55 cents, you always want to make sure that it's a good buy. So you can set your limit to buy at 55 cents, but then to secure our gains, we're going to set a stop loss at 50 cents, you know? So we have a 10%, you know, potential to lose money, if that makes sense. So stop loss are triggered. Like, let's say I tell Fidelity, once I buy Rex at 55 cents, I want Fidelity to sell my shares at 50 cents if Rex begins to go below that, because I don't know, you know, that area. So I don't want it to continue to drop and for me to lose more money. So it's pretty much a way that I can secure how much money I lose. And that's the best way to trade, to always, you know, be very careful when it comes to trading. So even though you set your like stop loss at 50 cents, it won't actually fail until the market value is selling at 50 cents in a sense. So what it comes down to is when you buy at 55 cents, when we trade with Techbud Solutions, we tend to shoot for 10% gains. And what that means is that, again, we're going for that 5% gain. And if you can see, based on its history, hits 55 cents and starts to pick back up. And, you know, we tend to shoot for 60%, and obviously it does. I mean, it's a very volatile, you know, stock overall. Rex is one that I tend to assign to a couple traders just so they learn, you know, how a stock fluctuates, where good pricing points are. And again, we have these different levels that I post on our group, as in, you know, level 1, level 2, level 3, and level 4. Right now we're trading right about the high or low point of level, you know, 2 or 3. So what that means is this is a critical point. It could either start going up or either start going down. And these, you know, the different levels are essentially almost 5 cents apart from each one. So what that means is if you're buying at a good level and you see it, you know, picking up, then you have potential to lock in your 10%, you sell, and then you wait for it to dip back down, and then you're patient. So you wait. If you see it start staircasing back up, then you make the decision to buy, and then you can make the decision to sell. But this is definitely a good stock to look out for. I would say set your alerts where I would, you know, at least based on its history, when it goes below 58 cents, based on, you know, the history that I know about Rex, is that really determines, you know, that it's coming back down to 55 cents. So 59, yes, it has hit it and then picked back up, as you could see, you know, as it did there. But then this point where it hit 58 cents, I feel like, you know, traders tend to know that, you know, all right, it's going back down. They all sell. So then you see this huge drop, and then it picks back up at 55 cents for those who know how to read, you know, graphs overall. So I'd set your alerts when Rex goes below 58 cents. Be patient. Make sure you get a good buy. If you want to take a screenshot, I'll actually post this on our group me for all those traders, just so you guys have a better understanding. You guys can print it, you know, and consider those good buying points, good selling points, and that's pretty much what you look out for. So if this is a level of trading, you know, the low levels or the low areas like 56, 55 cents are good buying areas, and then 58 to 59 cents are good selling points. So let's go ahead and move on to the next one. Give me one quick second. You bring my sound system? No. Yeah, I left it. Let me just close it. All right, guys, sorry about that. So let me go ahead and go back. So I can, you know, continue doing these analysis, and I'm just going to talk about different stocks very quickly. So ONTX is one that we're trading quite heavily. Jetson introduced us into or ONTX. He finds different stocks that have, you know, big drops and have a lot of upward momentum. So pretty much we saw it kind of determine, you know, a strong safety net above 324. So again, take a screenshot of this and pretty much, you know, find your good buying points. Right now it's trading in between the second level of trading. Make sure, you know, if you see upward momentum that it's picking back up, then, you know, you find your area of resistance and you sell according to that. But this is definitely one that I would say it's good to look out for. I would say set your alerts when it goes below, you know, $3.45 as it's coming back down to this old safety net. SKLN is one that is kind of like sketchy as of now. It's been, you know, on a downward spike. I'd say keep your eye on this one. I mean, this one, the volume has really decreased. So I'm pretty scared of this being, a true penny stock where, it can just go from, 9 cents to 5 to 4. And all those, they're just a couple pennies. You have to think about the percentages that those are dropping in like almost 50% increments. So you lose half your money every single time. So make sure that you see upward momentum when you're buying, as it does have, good spikes, but keeping it realistic, keeping it like, to your 10% goal. Make sure you trade according to that. So, know the safety nets, know the resistance levels. If you see it not picking up, then, make your decision of either to buy or sell and kind of go according to that. So that's for SKLN. ATEC is one that I'm thinking it's going to start coming back down to its old safety net of 19 cents. So I would set your alerts once ATEC. Let's set your alerts. So Fidelity allows you to do that. So once it goes below 25, no, even like 27 cents, I feel like that's a good point. Once it goes below 27 cents, I really do believe that it's going to start just, kind of doing what it did down here, as in, it's trying to hold above, 30 cents, but then it just breaks. Once it breaks this 27-cent mark, it's just going to start staircasing down, hit this resistance level, safety net at 19 cents, and then start picking back up. And, you want to make sure that you're buying at a good point. So again, this is a critical point. If you see it staircasing up, lock in your 10%. If not, then, secure your gains and buy at a better price point. So that's for ATEC. TBRA. That one right now is not one that I'd really look into. It's at too of a high price right now. So 519 is pretty much, kind of where it tops off. It's too high, with all these different levels. I'd say set your alerts when it goes, below $4.50, as when it goes below $4.50. I do believe it's just going to start staircasing down. So that's for TBRA. Aztec is one that I was trading. I was trading it above 150. Ended up breaking that safety net, so now it's on a downward spike. Good thing I secured my gains, and now it's just going to be going down, possibly down to 107. So make sure you set your alerts. If it goes down below 140, then that pretty much means, it's going to be in this new area of trading around, $1 to $1.40, which is, good, because you can just secure your gains, and then you can start buying down here, which means you can buy more shares, because if you have a smaller account, you can buy more shares and then write it up. You have to sell at 110 to lock in your 10% gains. And then with that, you have a little bit more area of, gains in a sense. CIE has been holding pretty well above 130. So again, I want to touch base on this one, as this one was one that one of our traders, Ishmael, told me to talk about. He wanted to know, how did I know that this was a critical point, and why was there such a huge drop, and why did I predict that there's going to be such a huge spike at this point? And obviously, I'm not always going to be 100% right. So pretty much, it had something, or CIE released some type of disclaimer that just gave it bad communication, and then once it just dropped down, hit that safety net at 96 cents, and we were trading. I secured my loss when that was happening. Just went on a downward spike. I waited for it to, lock in its safety nets. Once it did, and I saw it staircasing back up, the volume started to spike. I bought in at 84 cents. I sold at 97 cents that same day. And, I locked in about 15% gains that day overall. Started staircasing up. And because, it hit that safety, it kind of started doing a V, as you could see right here. It was showing upward momentum, which is great, right? But when it tends to hit 107, as you can see here, it started staircasing back down. So I told the team, be careful, make sure that you secure your gains if you bought in, anywhere below $1. But I knew this was a critical point. So this critical point either determines, if it's going to start going back down, or because there's no real, history of it trading between $1 and $1.30. Those that know how to read the graphs know that, it's just going to start spiking up, since it has no resistance levels in a sense. So when you have no true, resistance level within a certain range or certain level, then, all it does is go up. So, when it drops and it has no history of going below that price, all it does is go down. So, since it's trading within the 130, I believe that's too close. I would say kind of stay away. And you're going to see, once it goes below 130 to 129, then you're going to see it, just have a huge spike down in a sense. And that's pretty much, it could have a huge spike down and then it'll have a huge spike up. And then maybe then it'll start kind of staircasing up. But as of now, this is too new of an area. And that's why I kind of just predicted that huge spike based on this huge, just drop overall. And then the last one, I'm going to talk about TRKK. This is one that I traded. So I had this huge spike. I was actually at the airport. Not too sure what airport I was at. But I just remember that it was just picking up. Like it broke. I actually sold the day before, which really upset me. But you never know, right? You could have had a huge drop, and I would have been pissed off if I didn't sell. So I secured my gains. I sold at 59 or like almost 6 cents. And then that was a critical point, and I totally knew it was, but I just wanted to secure my gains, and it ended up breaking it. Just the volume spiked, and it was probably a pump and dump. Hit $10 cents per share. So from 5, to 10, that was 100% gain, which was crazy. And then it just had this huge spike down as people knew it was a pump and dump, and those that bought in at this high price ended up getting kind of screwed in a sense, and then it started trading back in its old safety nets of above $4. So I'd say with TRKK, I mean, you can't trade it with Robinhood, but if you have a different brokerage company, I'd say set your alerts when it goes below 4.5 cents, as those are considered like those like 10%, like it never really goes down there, and when it does, it tends to pick back up. But make sure you see upward momentum, and that's really just it. We're here to buy and sell. We're here to invest. And if you understand, let me go ahead and switch it to this. All right. So I think the hardest thing for people to understand is like the platform or what trading is. If you really just think about what trading is, as trading is just investing. So you're putting your money into something that you hope that appreciates so you could sell for more. So it's pretty much like for dealers that buy and sell cars, or for whatever you do. If you're an online like reseller, you buy things at a certain price, it's a certain commodity, right? And then you sell it for a higher price. Stocks are a little bit different. I feel people really do struggle to find the value on why stocks are so important, or not so important, but such a like possible way to like make money without actually having any certain commodity. But people are really hard to find it very hard to find value in something you don't that isn't tangible. And I think that's the hardest thing. So I think if you forget about like commodities and just like think about investing, the principle of investing. If I would sell you, most people that are in this group know about cars. If I were to sell you, if you had the possibility to buy a Bugatti, and I'd sell it to you for $10,000, those cars sell for over $1 million, right? So if you understand that you have an opportunity, although $10,000 is a lot of money, but if you understand that you are buying a commodity, which is still a share, like a stock is still a certain type of commodity. It just isn't tangible, and that's where people struggle. So if I would sell you a Bugatti for $10,000, you would be like, that is a great deal. But not a lot of people have money, so people are like, no, like that's a lot of money. But it's if you understand the value and what it's actually worth, or what you think it's worth, based on all we have to look at our graphs, and that's how we analyze the company. And if it switches from there, because now we're in a whole different field of we still implement the same skill of buying and selling. We try to value a company based on its graphs, on where it usually trades, and if it's at a certain price point that is below where it usually trades, and we have the opportunity to buy at that price point and sell it where it usually trades for a profit, then that's where we make our money. But then like, okay, when is that going to happen? That's why we have, essentially over 30,000 stocks to choose from, because it gives us 30,000 opportunities to make money. And, we have different stocks. I tend to, my watch list, that's one of them. I have a watch list of about, not too big, it's like 30 stocks. And with those 30 stocks, it gives us more opportunities. So not every stock is going to be at that price point that is considered a good buy. You should only be trading a stock when it's a really good, buy. And you're not here to impress anyone. You're not here to try to like ball out. We're here to make money, and it's investing. And if you understand and you stay disciplined to the 3 rules that we stick by, as in, only trading stocks when you only trading a stock when you see a 10% potential to make a profit. So if you buy it at $1, that it usually trades above, 110. And if you stick to that rule and you stay disciplined and you don't kind of get involved with hype and you analyze the company yourself. I mean, I'm just here to kind of talk about the company, but you're here to analyze it and you make the decision. Yes, Ricky talked about, TRKK, and it does usually trade about 4 cents. And I have the opportunity, if it drops to 4 cents, if it trades above 5 cents, to sell it at 5 cents. So from 4 to 5 cents, with that alone, I believe that's almost a 20% profit alone. And by you being able to do that and just analyzing that, then that's where you're going to make your money. That's where you have to find the opportunity to make money. So we have these different stocks to choose from. You're not going to be trading every stock every day. You might not even trade in a day. And if you stick to only trading stocks with 10% potential, not holding overnight with true penny stocks, so making sure that the only way you're going to make money is to secure your gains. And I've made the mistake of losing, like thousands of dollars because I held a penny stock overnight, and it either got delisted, which, put it in the pink sheets, and it sent it to just half whatever the price was, and I lost half my money, whatever I had invested in that company. That's one of the worst feelings because it kind of discourages, traders to continue to invest. And then, you go back to, just working your day-to-day job. And that's what I don't want to happen. That's what I want to prevent. So I want to get all of our mistakes and then kind of put it in this group where we can learn from our mistakes and share our best practices. And that's what I truly believe will lead to our success. And I've been speaking to, different members and just different entrepreneurs, and the whole purpose of Techbud is not only to invest in penny stocks, but to take, kind of how disciplined you are with trading and the whole concept of investing and trading and concept on your day-to-day life. And when it comes to buying and selling cars, if it comes to buying and selling homes, and it comes to investing or starting your own company, if you find opportunity or if you find value in whatever you're trying to buy or sell, I mean, the people that are in our group aren't just normal people. They want to be successful. And that's why I feel like if I can kind of be, or just set the guidelines of, what can lead to your success, if you follow those rules, and I really don't know why you shouldn't be successful. I mean, keep good work ethics, be realistic, and don't get involved too much with hype. I mean, when it comes to penny stocks, it has that, infamous temptation of, just you're going to lose all your money. And 90% of the market does based on someone else's opinion. And every time that, people are actually in our GroupMe, so they're not just in our Techbud's Facebook, but they're in our GroupMe, and they're like, okay, well, this person said it's going to, spike up. Do you guys think I should hold overnight? No, like, tell me why what you found that told you maybe I should hold this overnight. Like, screw what everyone else says. This is your money. I don't care if it's $1 or if it's $100,000. It's your money, and you should be investing it based on your opinion. I mean, you're the individual that chose to, start investing. So if you don't know what you're investing in, you don't know what you're buying, and you don't know if you're buying at a good point, then you shouldn't be buying. That's really what it comes down to. That's why I really want to focus on that, because I don't want to discourage anyone. I don't want to promote false hope. But if you can stick to those 3 rules of not holding overnight, 10% potential, and then setting a stop loss, which, secures your gains, then that's what's going to lead to your success. If you start trading with, in a sense, $1,000 even, when you start trading with $1,000 and you start hitting your 10%, you're going to start making $100 a day, which is $2,000 if you trade every day, a month, right? So then you'll see more of an income. You're going to have your normal job and you can trade. You can start growing your account, then start trading with 5,000, 2,000, let's say, and then $200 every day. Now you're leading to $4,000 a month. So now you're growing your account even more. This is a process. It's not a get rich quick scheme. It's really learning the principles of investing and then implementing them when it comes to your lifestyle. So if you have good work ethics, make sure that when it comes to trading, you treat it like it is work. It's fun. I mean, I know our group me hit 90 members, and then my Facebook group for Techbuds hit 170 members today, and it's a really fun environment. I mean, you get a network with like-minded individuals. There's so much potential within this group that everyone I truly believe is talented, and these people that are joining are a little bit above the curve in the sense, they don't just want to be, just like the average, just human being of what their income holds. So if I can spark some type of, change or some type of just opportunity, then that's what I'm here to do. I've used what I've learned from trading stocks into buying and selling homes, buying and selling, not even homes, because I mean, I buy them, but I only buy them if I find them to be, a good investment. But I do the same thing. And I do the same thing with cars. I do the same thing with everything that I do. I implement and I stay disciplined, I stay realistic, and that's the most important part. Yeah, so that's pretty much what I'm going to talk about, when it comes to, for those that are getting a little bit newer to trading. I have a couple messages that I'm just going to kind of go down the list. And if you guys have anything that you guys want me to talk about, please feel free to reach out to me again with any social media. If you guys just want to comment below, and we can go from there. So let's go ahead and see. Actually, I have access to it right here. Okay. Okay, so one that I'm going to talk about real quick is one of our members. Says, do you buy orders for multiple stocks after you analyze them? For example, setting a limit for GEVO hits 48 cents, so he's talking about a limit order, or do you set alerts and watch the stock and buy later? That's a really good question, actually. Essentially, I'm asking if you set orders strict based on analysis, or do you let it play by ear? So that's a really good question. So what he's saying is you have the tool of setting alerts. So we're talking about, like, let's say, for example, just for everyone's sake, Apple. It trades above, let's say, or for penny stocks, above $1. So if I consider Apple to be a good buy, do I set alerts when it goes below $1 and then buy in below $1? Or do I automatically set a limit order, which means I tell Fidelity to buy Apple once it goes at 90 cents? So it's already an order, so it fills right when it hits that point, or do I wait and analyze it as it goes below it and then make the decision to buy? And that's a great question. The reason I think that's such a good question is because I used to just set limit orders according to my analysis and then just let it play out. And then I learned about critical points on, like, when we were talking about CIE, and once it hits a certain point, it still has the possibility of continuing to drop. And although there are some penny stocks that, they hit that point and it's a really strong resistance and then starts picking back up, and then that's where you have to make your decision. You have to make your decision on how good that safety net is, and how strong you'll hold above that certain price point. So that's pretty much your decision that you're going to have to make. If you see that CIE never goes below, it never went below 70 cents and it hits 70 cents, are you going to set a limit? And based on your analysis, are you going to set a limit order right away to buy at 70 cents? Maybe not, because now it's going to get delisted and it's going to continue to drop. And then with that, because you got filled at 70 cents, although that was considered a good buy based on its history, if it continues to drop, then you're going to continue to lose money. So what I'd say, the best way to secure how much money you're making is set your alerts and trade according to that. So once it goes, I think that's the best way to trade to make the minimal mistakes. And once you learn that, then you can kind of make the decision of, you know, setting your limit orders just to buy in. So I'd say for those new traders or just traders overall, wait till, you know, set your alerts. Once it goes below that point, then, you know, you won't get filled as often because, you know, if it just hits that price point real quick and picks back up, you know, oh well, but at least you learned that, you know, that you had that opportunity. That's the whole thing about, you know, learning how to trade, is you need to learn. So I'd say as you learn, you know, just set your alerts and then buy according. And then after that, if you want to make the decision and you feel a little bit more confident, then you can start setting your limit orders according to your analysis. I don't feel like I'm there yet. I want to make the most money I can. I tend to shoot for now $200 a day, and I'm at an 87% success rate. So I've still stayed pretty, you know, just steady with my profits, and I'm not that much of a I'm not such an active trader when it comes to, you know, I only buy in when I see that 10% potential. So I stay really disciplined to that. So overall, you know, I'm not here to make as much as I can in a sense when it comes to trading patterns. I'm here to make realistic gains. I want in the long run to be able to make as much money as I can. So I think, you know, implementing those rules and staying that discipline will lead to your success. But that was a great question. Let me see. I think I have one more. Can you give us some references for outside learning? Anybody you follow, or how you learned about stocks? I bought a couple of books from Barnes & Noble this week. Should be a return on investment. Okay. Oh, wow. I have a couple questions. Okay. So I'm going to just go down the list. Can you talk about Gale? So this one's by one of our traders. So I believe I had it here. So he wants me to do an analysis. I believe I did talk about this one. Maybe not. But Gale overall, so we're going to look 3 months back. This is pretty much what I do. So it's overall safety net. Let's even go just year to date. Overall safety net has stayed above. And why is that thing blocking me? I'm pretty sure this is 30 cents if I remember correctly. So it's stayed above 30 cents. So that's an overall safety net, right? But now that we get a little bit closer within the month and we change the frequency, now it's trading above 40 cents. So, you know, that's okay. That's a little, so at a huge spike, as you can kind of still see here. And then now it started trading between these new areas of trading. So let's call this level 1, level 2, level 3. It's been holding very well above 38 cents. So overall, when it comes to Gale, I'd say, based on the slope that I see here, I'd say a better buy-in would be, you know, at 38 cents. So I'd say set your alerts once as it holds really strong above 40 cents. So set your alerts when it goes below 40, as that is a critical point. That's like the decision maker on if it's going to go up or go down, and then you can trade according to that, and you can start setting different alerts based on, you know, if it starts going up, then you can buy in and sell at, you know, 44 cents, locking in your 10% gain. And if not, then if it starts going down, at least, you know, you didn't set your limit order just to buy in at 38 cents. And if it starts going below, then you can go and buy it based on its old safety nets, which if I remember correctly, Gale used to trade, you know, above 35 cents mainly. Yeah, overall for Gale, I'd set my alerts around 40 cents. I'd say right now, like according to level 2, this could be a good buy-in based on, you know, being able to hit from 43 to 47 cents. But it looks like it just had a pretty big spike, and it most likely gonna come back down. So I'd say set your alerts first one when it goes below 42 cents, and then set your alerts once it hits 40 cents. As that is a critical point on where if it's going to start going down or start going up, and then trade according to that. But make sure you analyze Gale. As you know, it could even continue to drop back down, but if I remember correctly, it had a pretty big drop. So overall, you know, it's trading above $2, dropped all the way down, hit the safety net 78 cents. So like we say, new safety nets became, or were old safety nets. I mean, yeah, old safety nets become new resistance levels, just as you can see according to that. This is a perfect example of that. and it's been kind of, you know, spiking up, spiking down. It has had a smaller spike and then dropped a little bit, and then it's kind of been plateauing in a sense, right? So I believe within the next couple of weeks, maybe, that we're going to see it either, you know, break this or start going below this. But just keep an eye on Gale, set your alerts according to just your 10%, keep it realistic, and, you know, try to lock in your profits. But trade, again, only according to what you think is profitable. Oh my God. I just noticed that I was not sharing my screen. I was just talking, so that must have been very, it must have been not even helpful. SKLN, I believe I did talk about that. Yeah, SKLN, I did talk about, you know, being able to hold above 8 cents. So 8 cents tends to be a good buy-in. I'd say, you know, make sure you see that upper momentum, and, you know, just set your alerts according to that. So set your alerts at SKLN when it goes. Right now it's trading at 9 cents. So right now it's pretty much a critical point on if it goes below 9 cents to alert you, and if it goes above 9 cents or 9.091 to alert you as well, just so you can trade according to the graphs. And I know I wasn't sharing the screen on that one. So, and then Marcel talked to me, or asked me to talk about, you know, my references and where I learned how to trade. So I was, in a sense, self-taught. I've never actually been, so I've learned from my mistakes, in a sense. And I think that was what kind of triggered me to wanting to start like this group for penny stocks, because I lost a certain amount of money that I didn't feel comfortable losing, that not everyone, you know, in a sense, you know, I lost like $1,500, and I started trading at a certain, you know, age. That $1,500 was a lot of money for me, and for anyone. No one wants to lose that much money. And once I lost that much money, I was just like, man, maybe I shouldn't just be doing this. Maybe, you know, what they say is true. But I learned from my mistakes. I watched a couple videos, you know, just kind of like everyone else, of just the generics like Tim's, or I think his name is Tim Sykes, and all these different day traders that kind of luxurize lifestyle or the potential of penny stocks, which is true. But realistically, based on, you know, how big your account is, you know, you wouldn't be able to hit that goal within according, or at least in a certain range of time that he's saying. And that's really what I want to do with Techbuds. Is I believe people really mislead people when it comes to penny stocks. I want to keep it realistic, you know, being able to grow your account realistically, and show a lifestyle that you can live by not only implementing these rules when it comes to trading, but to your life overall, and how to be successful. And I love being able to spend time, or just, you know, communicate with all of you, because it motivates me on my day-to-day job overall, because I feel so motivated to help you guys, and because I help you guys, I learn more as well. And that's, you know, the larger we grow and the more knowledge we can, you know, gain as a whole, then the less mistakes we'll make, I believe. And yeah, I mean, I never really read any books. I know those are very helpful. I have a bunch of friends I have a friend named Nick that reads like a book every day. He's a really smart guy, but I was never one of those guys. I was pretty much more, I learned from my mistakes. And I learned that staying disciplined was one of the most important, or the key points, when it comes to being successful. So I learned about, you know, these supercomputers that were making, you know, millions of dollars, like I think a day, and it cost millions of dollars to make because of the algorithms that they had, and they're able to buy and sell according to certain formulas. So what I thought is, okay, if a computer can do it just through certain algorithms, I obviously can't do it at that high rate, but I can kind of just stay disciplined, stay according like a computer, which sounds very boring. But, you know, trading stocks isn't, you know, super fun. You're looking at a screen, you're waiting, you know, kind of just numbers to drop at a certain price point, you buy and you wait for it to pick back up. So it's not a fun thing, but when you trade according, and you surround yourself in an environment that, you know, is fun, then it makes it so much greater. Yeah, that's, I hope that answers your question. Okay, so CBR, that is not one that I have. So I'll do it though. Let me go ahead and search it up, CBR. I don't think I've ever looked at this stock. It's going really slow because I'm doing my live stream. And I know I'm going a little bit over the time, and I'm really sorry, guys, if I'm taking so much time of your guys' Sunday. But thank you guys for all those that are continuing to stay tuned in. Okay, so CBR, not really. It's a penny stock in a sense. It goes below $1. We're going to click advanced chart. I'm going to start sharing my screen. All right, CBR. This is year to date. So I see that it used to trade, above $3, had a big drop, picked back up, hit almost that, resistance level, had a huge drop. So based on what I see here, is I'm going to change this. Right away, what I could see is it had a safety net here, right? Picked back up, hit that safety net, and then started going back up. So overall, I say that there's a safety net here. And you could see just based on its history that there was a slight resistance level there as it struggled to go above 130. Once it ended up breaking it, just started spiking back up. And I guess it increases in about 10-cent increments. Well, this one was a 20-cent, and then from here to here, yeah, different increments overall. But we can call these different levels of trading. Let me go a little bit closer. There we go again with the safety net right around 90, staying a little bit above 93 cents. And then a resistance level, a pretty strong resistance level around 130. So what I'd say is right now, and there's also a slight safety net right here. Say 110. So, hit 110, drop down to, above 93 cents, and then hit this. Once it broke it, hit 130, started staircasing down, and was staying above 110. And now it's trading in between this little area. So it looks like there's also, a little resistance right here. So it was struggling to go above, 120. So I'd say every 10 cents or even every 5 cents in this one, it struggles to go, it trades in between those areas. But we'd call these different levels. I'd say set your alerts at 130 and 110. If it goes below, 110, or if it goes above 130, or you can trade according to, level 2. If you think level 2 is a good buy, and you can buy in around, the 110 to 112 range, and then be able to sell within, the higher level of level 2, which would be around 125 to 130. So I think we're at a pretty good week, or pretty good price point, where within this week we'll see it kind of either hit the safety net and then start coming back down, or hit the safety net and start picking back up, which is showing up momentum, which overall promotes growth within the company. These are penny stocks. We really don't care about that. We're here to day trade. So really up to you what you want to do. I'd say set your alerts according to 130 to 110, as those are pretty much critical points when it comes to trading CBR. So I hope that was helpful. And yes, I was sharing my screen. Oh. All right. Howdy, guys. So I believe those were most of my questions. And yeah, I usually tend to, for those that are new to trading, I set my alerts the night before. Wake up in the morning. If I see some alerts, I trade according to that. I tend to wake around 6 o'clock. So markets open Monday through Friday for Mountain Standard Time, or at least, California time as well. It's open from 6:30 to 1 o'clock. And then, Eastern time, it's open from 9 to 5 or 9 to 4. I'm not too sure. But yeah, it's really fun. I feel like if you really want to get into trading penny stocks, that I'm not going to try to say, okay, you should join this group, but if you want to learn how to invest and surround yourself with, motivated, like-minded individuals, this is a great place to do so. We're not charging you anything. It's free. I'm really working on, different projects to continue growing this group and be a little bit more innovative when it comes to investing, because I don't want to just stop at penny stocks. I want to help you guys out with your own personal, ventures when it comes to starting your own business. I believe I go to ASU, right? I go to ASU Polytechnic, and it was, reported as one of the most innovative colleges. And I still truly don't believe that, although it is reported as one of the most innovative, that colleges nowadays lack, innovation and lack that support to kind of, and it's, I don't know if it'll ever be there, but that lack the support to kind of promote growth within the students, because there's so many. I mean, Arizona being one of the largest universities, I really don't feel like they have the potential to do so, at least not now. So I want to be that person for you, as in if I can kind of just guide you in the right direction, or kind of talk to you about, or just touch base. I touch base with about 10 different members personally, and they keep me motivated and I keep them motivated. And it's just a great environment. Like I talked to them about my investment properties, and I talked to them about what I'm doing with Techbud and what I plan to do. And they have nothing to do with what I'm trying to do. They're starting their own business, and they tell me about it, and I tell them about my ideas, what I would work. And when you start to brainstorm and you start to communicate ideas, that is what's going to lead to success and innovation. And something that you might have not thought of can be said in a group, and you're like, oh wow, that's really not a good idea. You guys can network and kind of create a business with that. But I've been so blessed to be in this certain situation where I'm at 21 years old, and I'm at this current just place in my life right now where I want to help people, and this is where I see my future going. And I don't really have to worry about money anymore, although I am still working as hard as I can with everything that I choose to pursue. But I want to be here for you guys. I want to be here to help you in any way that I can. And please feel free to reach out to me if you have any questions. I don't know if you guys saw my last video. I got a lot of bad feedback. I got really good ones and then really bad ones as well when it came to making the video on buying a car when I was 21, or at 21 in 2 houses. Didn't get great feedback because of different things, but I'm putting myself out there, and obviously I'm gonna get some hate, but I just want to make sure that I can filter out those people. So those that aren't at this current place right now and are at, I guess, in a critical point of wanting to be successful, those negative comments can really bring someone down. And especially when they're at a young age, or at any age overall, there's no reason to do that. You're not benefiting yourself, you're just bringing someone down. And I just find that very discouraging when it comes to someone trying to be successful and telling you can't live a normal life. And that's what we're not here to do. We're here to help one another out. We're here to promote growth in any way possible when it comes to growing our accounts and then growing as a person and as an entrepreneur overall. So thank you guys again so much for tuning in for this weekly stock talk video. Hopefully you guys found some of the material in this video helpful, and if you guys did, we'd love for you guys to share it to anyone you think would benefit from this. And yeah, if you guys have any questions, I'm going to put my email down below. You guys can feel free to join this group on Facebook, and then if you're really into trading, then we can get you into our group for GroupMe, where we talk daily about what we're trading, and just staying motivated. Thank you guys again. I hope you guys have a good Sunday, and let's start the week off by a green day. Stay disciplined and stay according to those 3 rules. Thank you guys again, and take care. Bye.